But it's not just the U.S. closely watching the central bank. Emerging markets are also bracing themselves as well. Many have prepared themselves for a hike to soften the economic blow, among them Brazil. And that's where we find Paulo Cabral, live for us in Sao Paulo, with much more on the possible reaction there. Hi, Paulo.
Hello, Phil. And actually, well, let's just go back a little bit. The economic slowdown in the world, you know, it has hit Brazil severely because Brazil is a big exporter of commodities, and as exports have reduced, their price has also reduced. So now, well, there are reasons for Brazil to be expecting, as the whole world, the recovery of the United States. But of course, this path to recovery is not without bumps. And this concern becomes even bigger as Brazil, you know, just lost recently the investment grade from Standard & Poor's, and possibly Moody's will do the same. So this, combined with higher interest rates in the United States, certainly could attract many capitals that are in Brazil to the United States. That's what economists say. But they also say that Brazil has prepared more or less a cushion to be ready to absorb the initial shock of the changes in the U.S. economy. Brazil's currency has plummeted against the US dollar this year, the real's devaluation topping 40%. There are a number of domestic reasons for this, but the anticipation of a rise in the US interest rates clearly helped boost the US dollar and push currencies the world over to depreciate. The concern now, what will happen when the United States actually follows through and bounces its rates up? Some analysts say that the US Fed's gradual approach and the wide expectation of the market will limit the impact of the shock, at least at first.
The market has already included in the price this. There will be an effect because most of the investors in the emerging markets will go back to the States. But at the beginning, since the increase will be small, I don't anticipate a huge flight of capital.
The Brazilian economy is facing a tough 2016. Inflation is likely to remain high, unemployment is rising, and the market forecasts a drop in the GDP. But despite all this frailty, economists say the country has managed over the last years to create a cushion to deal with international financial crisis, even if this works only for a limited time.
We have accumulated a vast war chest of international reserves. They still stand at 370 billion. In terms of reserve accumulation, we did our homework. Well, I think we failed, however, when it comes to any development on the fiscal front. Ideally, at this point, we should have a strong fiscal situation that would allow us to react to external shocks, right? So ideally, we should have reduced the debt.
The government acknowledges difficulties, but says it has to look for opportunities in the crisis, like using the favorable exchange rate to boost exports.
Of
course, we can't rely on exchange rates forever to sustain our economy. But right now, the devaluation of the real has helped us to offset deficiencies of the country that increase our production costs, like the lack of decent transport infrastructure.
Shifts in the U.S. economy tend to have a strong impact on emerging markets, so concerns over capital flight or instability in exchange rates seem natural. But economists also say it's important to remember that in the long run, it's good for the world economy to have the United States on a path of growth. Yeah, but then for that, Brazil also needs to prepare to get on its own path to growth. And as the Minister of Development said, there are severe limitations in Brazil, transport infrastructure, energy infrastructure as well, telecommunications, quite a few issues that make it much harder for Brazil to grow. Nobody expects this to happen anyway in 2016. I mean, all market forecasts is that Brazil will have another year of recession in 2016, but it could go back to growth in 2017. But then, is the country ready to it? This is the big question for next year, one of the big questions for next year here in Brazil, Phil.
Hey, Paulo, I mean, you got a lot of problems there you just talked about, and we can't get into all that, but what's the government going to do to fix that?
Well, what the government can do right now, you know, President Dilma Rousseff is battling an impeachment. The opposition wants her impeachment for alleged fiscal fraud. She would have made accountancy fraud on government figures for her to look better. That's the allegation of the opposition, and she's using quite a lot of energy to try and fight this impeachment process, you know. And while she is at that, actually the government has not been able to make the austerity plan to go as quickly as necessary through Congress. You know, they have a lot of negotiations with their allies. They are allied, but still bitter negotiations in Brazil, and even worse disputes with their opponents. So yes, that's much a combination of a political problem, an economic problem, and one is just feeding the other. We have to see in Brazil when this is going to stop and where it will stop.
I don't know if the people have the patience to wait till 2017, but we'll see. Thanks, Paulo.